Hi, this is Matt Collis. I'm the CFO of Parasoft, and you are listening to CFO Thought Leader.
This is episode 1074.
We think our wins around AI have enabled us to continue to invest, or have candidly driven us to continue to invest more in the AI space because we see the opportunities being so high. But that investment means that we're going to, make some investments, and our profitability profile looks a little bit different, not a lot different from what it might have looked like last summer. And then we're starting to see areas, we really hadn't thought about demand forecasting as a really big market for us back in 2020, but we do now.
Hello. The last time we spoke with Bill Koefoed, he was still within his first 6 months as CFO at OneStream. It was March 2020, just as the world was bracing for some unprecedented changes triggered by COVID-19. Those familiar with Bill's background may recall that he once led investor relations at Microsoft and served as CFO at Skype, guiding that company into its global expansion. Well, here we are 5 years later. OneStream now boasts over 1,500 employees, roughly around 489 million annual revenue, and it went public in July of 2024. Bill, welcome.
Thank you, Jack. It's nice to be back, and 5 years has been a journey for sure.
So with that in mind, last year's IPO certainly generated quite a bit of buzz around OneStream. Now that some time has passed, Bill, can you share with us perhaps some of how life has changed at OneStream?
Yeah, I'd say a couple things. I mean, going into the IPO, we were, we'd spent quite a bit of time doing mock earnings calls and really preparing to be public. And that preparation really paid off. We've just had our third earnings call. And, as you mentioned, obviously I had my background at Microsoft, where I did 17 earnings calls. But, being prepared is really important. I'd just say, being a public company is, you have public company investors, you have a stock that everybody can watch on a ticker every day. Last week we obviously reported our Q3 numbers, our Q4 numbers, and, we move on to Q1. So it's it's a very repeatable process, which is, both good and bad. I mean, being private, you don't have the, kind of public company reporting. You still have your board and everything, but, obviously, you don't have a stock that moves every day.
Yeah, exactly. And just curious, as you look back, we'd love for you maybe to just distill the biggest lessons learned since ringing the bell. What would they be?
Yeah, sales predictability. I mean, I knew that going in, but the sales predictability really matters. And the further out you have, the better. It's funny, I think many of us on the call went through ASC 606, which was the accounting change around revenue recognition. So much of, and you mentioned that we just reported $489 million of revenue. Most of that was booked, prior to the beginning of the year. So, a SaaS model is really quite favorable for reporting historical results. Obviously, investors want to look forward and look at things like guidance and some of the other metrics that we report. We report ARR annually. We report net revenue retention, net revenue retention. So some of those metrics, we report in addition to that to give investors a perspective on how our business looks going forward, in addition to the reporting that we've had historically.
So again, your emphasis there, nothing new there, nothing you tweaked, nothing you changed as far as how those metrics were created and communicated.
No, they become more intense when you're under the public eye, certainly, than they were when you're a private company. But again, my advice is get really be really thoughtful on the metrics that you want to use. We ended up, you kind of choosing to report ARR once a year, rather than quarterly. And the reason why we did that is, I get measured on our annual ARR growth, in my metrics and my bonus. And I think it's really important that we try to, I've seen this as a theme from some of your other interviews, Jack, is, you want to be cognizant of the short run, but you want to focus on the long run. And so for us, reporting an annual number as opposed to a quarterly number, we obviously still have to report quarterly revenue and the like, but we think some of these numbers, reporting them annually to give us a little bit of a broader perspective, made sense for us. And so far that's worked out.
I'm curious, Bill, did you see other CFOs doing the same? Did you consult other CFOs saying, hey, what do you think if we did this? What would the reaction be?
Oh,
I mean,
100%. Like, I can't, many of the people, I've also seen some of your podcasts, to give you a call out, but, I love this community of CFOs is so awesome. And, I've been lucky to have some great mentors, and I've been trying to pay it forward to some of the people that have, that have reached out to me since the IPO. You mentioned Microsoft, the Microsoft network of some people who've landed in really good CFO roles has actually been really been fun to watch as well.
Well, we wanted to talk to you today about AI, and curious where you take us with this. But OneStream has built, of course, its reputation on advanced CPM and analytics. And as CFO, how do you see AI fitting into the company's long-term strategy? That's a big question, but we'll put you on the spot with it.
No, it's okay. I mean, it fits in so many different ways, right? I mean, AI helps you on the cost side, certainly in areas like, call centers. I think the trail is really well worn, on that journey. Certainly our developers are using AI to help them accelerate and develop better and faster, using AI tools. But on the, bringing it home to the finance department, and we look for other areas where we think AI can obviously help to make us more efficient. And there's many throughout the organization. In addition to that, so let's take that home to finances. We really think AI can help supercharge the finance organization. I think every CFO on this call is going to acknowledge that their team works really hard, and they need better tools and to have, their FP&A team not working until 2 or 3 in the morning. And so AI tools can help make them more effective. And, that's what we've seen. That's what we've done. We use, we proverbially eat all of our dog food or drink our champagne or whatever term you'd like to use. But we found it, to help, make us, better and smarter, particularly around areas like demand forecasting, which is an area that, of course, every company struggles with. So, that's been helpful.
Can you share with us, shed any light on the types of AI or machine learning investments OneStream has made or is planning to make?
Yeah, no, that's a great question. So I was trying to think as you were talking about 2020. I don't think that we had quite that narrative. We were trying to figure out, what was going on with COVID at the time, but we had started making, investments in an area called predictive analytics, back in 2017. It was a pretty small investment back in 2020. But then there was a group of developers that was local to Michigan and knew our company that had some good ideas around AI and particularly around, sensible machine learning. And so they started a company. We invested in that company. We're the only investor in that company, called DataSense. And, it was, some University of Michigan engineers, and they obviously ended up recruiting people from other universities. And we acquired that company back. We had an option to buy the company back when we made our initial investment. And then they grew. we're starting to win big customers that really showed the value of that product. And so they ended up, we acquired them I think in May of last year. I think they've certainly probably doubled since then in terms of their size. We continue to invest. We think this is a big opportunity in terms of, you mentioned our results for last year. They ended up hitting their plan, and which was more than quadrupling their number of customers, and the customers that are leveraging their software are the largest companies in America. We'll say the largest revenue-based company in America uses us, and some of the other big ones as well, because your demand forecast matters a lot, and we've been able to help their teams do better analysis in a faster time, and that's of course what everybody wants.
I'm just curious about that acquisition, Bill. I don't know if you can share any insight into, were you a champion here, or were you more of a skeptic at first and got won over? Can you just share some of the backstory with us? Because here it is. I mean, was it the corporate development team? OneStream's not a big company. How does this happen?
Yeah, no, thanks. I'm smiling through that process because, of course, we've got a large private equity firm as our major investor. And then obviously we have our internal management team. And I would say, without giving away too much details, there were definitely skeptics and there were definitely champions, and candidly my role in that process, because we actually don't have a corporate development function at that time. To your point, we're a small company. And so I was the one who was, trying to figure out all the logistics of the deal, and obviously also working with the DataSense team to negotiate what they wanted, and trying to balance all that, back and forth. And oh, by the way, this is also why we're preparing to go public. So it was a stressful time, Jack, but we made it through, and I can't be happier for the for the outcome that we've had there. That's been a great acquisition. Even the skeptics, candidly, one of whom I talked to yesterday, agree that it was just a home run for us.
When we talk about AI investment with you, we're interested to know if OneStream is really, is it more R&D driven initiatives that we're talking about, or would it be near-term commercial application enhancements? Or do you not look at the world that way? That's how, as I talk to finance leaders, I see these two buckets frequently, but I don't know if that's OneStream's story.
That's a great question, Jack, because they're both relevant for us. We do have, as I mentioned, we acquired that company and continued to build on it and adding talent. I mean, the nice thing about us being based in Michigan is, there's obviously a great university that's nearby that, that has lots of talent. We've been fortunate. I think we were maybe the number 2 most requested interview from kind of AI engineers last year. And we're really excited about that. We're getting a really nice reputation there. But the other thing that you mentioned, so we also have a development platform, again, not dissimilar to, what a Microsoft would have, in which you can write software on our software. And so we have, we have we have partners that write applications on our software, and we have our first ISV who's writing a sales performance management application on our software called Infinity SPM. And we, we're really trying to nurture that relationship. I do have I mentioned I don't have a corp dev department, but I'm hiring a corp dev leader. And, hoping to do both. It's to invest in our current capabilities and then partner and invest in new companies that we can, that we can help grow and help build on our platform. One of the nice things about going public is we have over $500 million of cash on our balance sheet. So, that gives us the opportunity to go, continue to build out our ecosystem.
Now, the typical question I would ask is, how do you evaluate and measure the ROI on AI investments? And I think you already touched on part of the answer, but I'm wondering if you can boil it down to us and whether you felt the need to sort of modify past approaches here because of the uniqueness of some of the technology. What would you share with us?
Yeah, I don't really look at investments in AI any differently than I would look in investments in any other type of R&D. I mean, you should be, or cost savings initiative or anything else, right? I mean, you need to figure out what's the cost, what's the risk of of that cost, not being the cost that you think it is, of course. And then, and then what benefit do you think that you're going to have? And in software, it ends up it's a complicated equation because, again, back to one of my conversations with the CEO at Microsoft when I was there was, if you can hit one of these things, then because just the value of software, your COGS are such a small part of your business that your ROI ends up could become quite high. And so then you're trying to balance, you're trying to figure out what your cost envelope is and kind of what the investments are that then have the highest ROI, and then you try to stack rank those and invest in the ones that have the highest probability, have the best opportunity for product market fit, and make those investments accordingly. And obviously AI is a really exciting growth opportunity for us right now. We feel like we've got a really good product in market that we can build around, and continue to enhance customer value. We're trying to figure out how we can get, AI, as you probably know, costs a lot, just because of the training and the like that you have to do on your models. And so working to try to figure out how we can lower that cost to increase the opportunity and the market, the market opportunity that we have out there, with not just big companies, but middle market companies as well.
You mentioned the corporate development team that might be maturing or adding talent there. Bill, when you look for candidates, is there something that you're looking for? What stands out to you as you look to perhaps beef up that team?
Yeah, no, for sure. It's it's somebody. We're an enterprise software company. We tend to serve, call it middle market and enterprise companies. There's obviously other companies that are in that space adjacent to ours. We talked in the IPO about, certainly Salesforce. If you kind of look at platforms that have emerged over the last 20 years, Salesforce obviously became the platform for the office of the CRO, obviously building on top of the capabilities that are building better capabilities than Siebel had back 20 years ago. I know I'm aging myself here, and then of course Workday replaces PeopleSoft, and then Hyperion, obviously Oracle acquired around a similar time, and there's a big install base for Hyperion, and so we're obviously looking at that, hopefully gonna continue to accelerate in that space. And then obviously ServiceNow has been an incredible company for the office of the CIO. And so they have similar characteristics that their platforms, they tend to attack a specific customer within the marketplace. And so some of the lessons learned that, ServiceNow and Workday and Salesforce have, that path ahead of us. There's people that have certainly been in those roles that have great lessons learned. So we're certainly hoping to learn from that.
As you talk with industry analysts as a newly public company, and you try to achieve that balance between, explaining your AI investments and expectations on the street, what have you found necessary to educate them about AI? Is there something that, you found yourself modifying your story because you realized they were getting part of it, but not full story?
Yeah. Jack, that's such a relevant question. We reported earnings last Tuesday. So as we offered guidance, you get feedback on your, growth versus profitability. I mean, every company is, trying to balance that. And we did, back from some of the discussions that we had in the last summer timeline. We think our uh, wins around AI have enabled us to continue to invest, or have candidly driven us to continue to invest more in the AI space, because we see the opportunities being so high. But that investment means that we're gonna, make some investments, and our profitability profile looks a little bit different, not a lot different, from what it might have looked like last summer. And but we think the opportunity for us to continue to grow, and we end up in these cycles, and you and I have been through several of them, where you go through the internet and then you go through different cycles, and we think the AI cycle is a really big one, and so you got to invest, and you got to make sure that you can take advantage of that opportunity, and we think investors will be rewarded for that, as we achieve our growth profile that they're hoping.
Bill, when we talk to you, I sense you're a sort of a practical finance leader, one that won't tell me the role is really changing in significant ways. It's really the same role. I just, have to spend my time a little differently. But now with AI and innovation happening, and even the DataSense acquisition, I mean, have you found yourself reaching out and trying to participate in other meetings in the organization that before, turn back the clock 5-10 years, you wouldn't have expected to want to be included in? But I mean, can we see how your role is evolving, and has it needed to change in some respect? And again, you only had this IPO, so of course it's changed and you're spending your time differently. But related to AI, all of a sudden there's lots of different concerns across the organization about it.
Yeah. So we did a study called Finance 2035 that we, surveyed investors and some of my peers and CEOs and the like. And we're finding that the role of the CFO is becoming more strategic. AI is just a part of that, but, CFOs are helping CEOs to look around corners. CEOs have so much so many things that they have to focus on, and so many things that they need to understand. And so having a really great CFO who can, help partner with them, look around corners, be strategic. And to your point, AI just helps the CFO be more strategic, because they can get more data, and that data can help support the decisions that they work with the CEO on. So it's a bit of serendipity here on kind of the role of the CFO and AI enabling the CFO to be more strategic are converging, and I think the CFO role is the best role in the company. So it's a fun time to be a CFO.
Just as far as R&D investments in AI are concerned, are these big investment? I mean, are these sizable investments? Are these, when you compare it to earlier in your finance career, when there were R&D investments, granted they're different size companies, but relative to the size, the company this is, are these large investments? Help us understand better all of what's at stake here.
Yeah, it's a bit of a war for talent. There's, and some of the biggest companies on the planet have lots of resources to be able to compete for the war of talent. My former employer, as well as, Google and Facebook and the like, are, obviously OpenAI. They're all competing for talent. And so making sure that you're getting the talent, because, that's a really important part of the equation here. And again, we've seen this before in other parts of our software journey and in other capabilities. But the talent war is real, and making sure that you're getting the right talent so that you can attack the investment or attack the opportunity is actually really important.
So when you say that, I imagine there's your talent officer comes to you and says, we have to make a bigger investment here than we may have like 12 months ago, but we're finding, to get this type of knowledge and skill set, this is what it now takes it wasn't budgeted. I don't know. Are those the types of conversations you find yourself having as you talk about the war for talent? Bring it home for us. Make it real for us. What does this mean? Bill's having a lot of conversations around the company about certain hires, or what does it mean?
For sure. Actually, the example that you just mentioned is real. Yeah. I'm not saying it happens every day, but we do want to, we want to make sure that, we get the best and brightest talent. And we think if we do that, candidly, the ROI, back to our earlier conversation, is quite high because we can build on the capabilities that we have. And, it's, you're trying to balance it. We obviously have a budget. And so in some cases you have to decide, like, is that if you're going to make that decision around hire, does that mean that, you get to hire less people, that they're higher costs? So you're always, trying to balance that equation. It's not like, again, for everybody who's listening to this call, I'm sure they empathize with me that, it's not like you can just sit there and just, go hire crazy, unless you're one of those companies, maybe, although some of them are scaling back a little bit, that you can go after this, but talent matters.
Just want to touch on data privacy with you. I'm wondering, over the last 12 months, has the finance team changed how it's partnered with either compliance or legal as they look to set certain guardrails? Has that relationship been modified in some way? And I'm trying to put that, it might just be minor tweaks, and I'm sure that happens regularly, but anything more you can share with us about given the concerns over data privacy, if there are steps that were taken, or, more frequent conversations being had, maybe?
That's really important to us because we are the book of record for most of our customers. In other words, they report their numbers to Wall Street, or they report their numbers to the board off of the OneStream, reporting platform. And so, obviously that matters, that there's security and compliance and privacy and the like. And so it's a topic that matters a lot. It's actually why, as we apply AI within our infrastructure, we think we have a competitive advantage because we bring that AI data in and house it within our secure environment so that you can look at your data. You're not just using a bunch of, public chat GPT to look at historical public information, but you want to look at your own private information as well and be able to garner trends and learnings. And so it's a really important part of our offering, and it's something that we spend a lot of time on.
Bill, just want to give you the opportunity to fill us in a little bit about what OneStream is up to. Are there any major product launches or AI breakthroughs on the horizon that you can share with us?
We've had 2024 for us was a year of innovation. Tom, who's our CEO, we have a user conference, and this year it was in Las Vegas. We had 15 new innovations. They were, things like, Power BI connector, which is to the Microsoft platform, new AI innovations, continued development around what we have as an AI library, and we have some. We're continuing to develop on some of the capabilities that I mentioned just a few minutes ago in terms of enabling you to better curate the information that you have within your environment. We've had also, as I mentioned, a really good year with building on the platform for areas like sales performance management. And so a lot of those things are hitting market just now. As we just had our sales kickoff launch 3 or 4 weeks ago, and so getting all those out to market. ESG was another one. I don't have all the HE. We announced 3 more in the fall. One being ESG, and we just launched a new ESG product because, again, we think the CFO has to be the reporter of ESG information because by definition everything needs to be accurate. So we're fueling people with those capabilities, and we were really excited about 2024's innovation.
Should we expect to see some acquisitions in 2024?
I'd say we're definitely looking, and we would be we have an appetite for it for sure. Is what I would say. I don't know that I don't know that I have a probability weighting, but we're certainly open.
You mentioned again the war for talent. If there were acquisitions, I would suspect talent's a big part of it. Would that be a true statement, or?
100%. In some cases, again, the one in OneStream means we have one platform. So to the extent that we do make acquisitions of something that wasn't built on our platform, we'd have to re-platform it again, not dissimilar to what ServiceNow has done. And so that to a great degree, the talent matters as much, if not more, than the capabilities of the software that we'd be acquiring. So yeah, no, I agree with you.
Wondering if you wouldn't mind, how do you see for corporate performance management? How do you see the landscape today? How is that evolving? Are you where is OneStream occupying the space you expected it to? Did it, have some surprises where it was able to grow in certain areas that were not expected over the last 5 years? What would you tell us?
So putting my 5 year ago hat on when we talked last time, as we all know, the beginning of 2020 was rough just because everybody was closing down, and I had a whiteboard at my office, probably where I was talking to you. I don't think that whiteboard changed for 12 or 18 months because nobody was in the office. But it's been an awesome journey. I think we feel really great. There's still somewhere between 15 and 20,000 Hyperion and business objects and the like, legacy install base that's out there that is right in our wheelhouse. And then we're starting to see areas, we really hadn't thought about demand forecasting as a really big market for us back in 2020, but we do now. And so we're really excited about that. We're really excited about seeing how AI, and the beautiful thing about our demand forecast is you can basically go train your models, and then you can integrate it right into your OneStream, planning application. And so the integration there, has been really great, and that's been a big learning. And then we've been excited to see people building on our platform. We'd like to see that obviously continue to build or accelerate, but that's that's important. And really, no one else has exactly the same type of kind of strategy and capabilities that we have. So we feel really well able to compete right now, and I think you'll see more of that as we get to 2025.
Well, Bill, we really appreciate you allowing us to catch up with you. I do have a closing question for you, and that would be: do you have any parting words of wisdom on navigating, and we'll go back to that balance between public company expectations and AI-driven innovation? As a leading CFO, what would you tell us about that balance that needs to be achieved? And again, that back and forth you're having with the analyst community these days.
Yeah, I'd say a couple things. I can't understate the need to be prepared, and to plan and to do mock earnings and get people who've been through this before, working with you. It's really important. I was really lucky to have, great partners on the investment banking side. And then similarly, my board, has been really great. And I can't appreciate that quite enough. And then my peer to obviously help me along the way. My view, and everybody has a different view, my view is that public market investors want to invest in companies that they see have durable growth. And to have durable growth means it's not just about the next quarter, but it's about the next year and the next 5 years. And so you need to make investments. This world is particularly in tech is, changing a lot, and making sure that you're making those investments so that you can be successful today, but you can, talk to your investors about the investments that you're making and why it's so important, and what the market opportunity that you see and how your product market fit is unique. And that's a big part of being a public market. Obviously it matters as a private company as well, but you really have to be great with telling that story to public market investors many, back to your question about the DataSense, many who are just skeptics by nature, and some who really know the space and are really excited about the opportunities. So that balance, I think you nailed it on your comments. That balance of profitability and growth is something that you have to be able to defend and tell people about the opportunity ahead and be good at
Bill,
it.
I did lie. I do have one bonus question for you, and I apologize. Now, anytime we have a CFO like you who their company went public within the last 6 months, just how the time you spend communicating with your stakeholders and frankly, shareholders and analysts, most CFOs will tell us they never would have believed it took this as much of their day as it does you. I somehow think you probably have it locked in already. You had a sense of it. You had participated as a investor relations person. You really had a sense of this. Or no, what would you tell us? Did it meet your expectations, or did you in fact have to allocate additional time to that communication chore?
The funny thing is, there's only been 3, maybe 4 software IPOs in like the last 3 or 4 years. I mean, it's been not very many. And so we wanted to be really sure that we're going to have a successful outcome in the public market. And so we did, and I know companies are doing this today, but it's another round of testing the waters. It's another round of testing the waters. It's another, and so you're getting feedback, and just a little bit of a reminder of the last year. Workday and Salesforce both reported in May of last year, right as we were on, starting to think about flipping public, and their results in May last year, neither one of them were really good, and in the market. The overall software market kind of took a bit of a hit for it. And of course, we're reacting. I'm like, what does that mean for us? And so we went and did, more testing the waters meetings. And so we did so much through that process. And then obviously you start your roadshow, and, you may remember we started a roadshow right after the Monday after Donald Trump was shot. And so you're trying to think about what the reaction was going to be related to that. The CrowdStrike outage happened on the Friday while we were on the roadshow. And, what's the market reaction for software going to be? And so a lot went into that. The interesting thing is, Jack, after you go public, then you're in quiet period. and so you don't talk to anybody. And so I went on vacation for a week, and I was, kind of detoxing for all the investor calls. And then we had a really short, we had to do our Q2 results, and we had like a 2-week window. And I think we did a conference or two during that window. And then we're in quiet period again for another month and a half. And so you go through these ups and downs of talking to people for a lot, and then talking to people nothing. And so it's a bit of a roller coaster in terms of investor engagement.
Well, Bill Koefoed, thank you for making time for us. It's been too long. Hopefully we don't wait another 5 years before having you back. Thank you for joining us on CFO Thought Leader.
I appreciate it. Thank you.